All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the 76 half resistance ended up capping the upside, and the other markets remained relatively balanced as well, coming back into their areas where they broke down from, retesting them, and then finding sellers. In NQ, we've been talking about the 35.45 to 35.50 zone as support over the last few days. So this was a case of the market coming back up, testing that support, broken support acting as resistance, and NQ ended up capping the upside at 35.45 quarter in the overnight session. So that theme of the relative weakness in the other markets, that continues to be in play. At the very minimum, it calls for being cautious on taking any aggressive long setups until you've had kind of a high momentum push in one direction. And then buying pullbacks is a strategy that has been working. But if you look over the last week or two, if you're getting long at aggressive prices, the upper end of the recent range, then that hasn't really been working. That's where the sellers have entered the market and pushed the market lower. The only time we get big buy responses is when the market is testing a support zone that hasn't been tested in quite some time, and that first test has been resulting in a pretty nice buy response. But overall, this is a market which is still in balance. Our bias is neutral, and even cautious on buying any aggressive prices. Again, unless it's a high momentum move followed by a pullback, expecting a new high. That type of setup can work, but buying higher, expecting a breakout, that's a that's a strategy that you have to be careful with. So overall today, we're using 70 half to 72 half as the micro bull bear zone, but that doesn't mean that if we're holding below it, that sellers are like in firm control. The way that this thing is set up right now, the 70 half to 72 half is the high volume node within the current trading range, within the current balance, and holding above it would tell us that there's some buy side strength. But if we're just trading below it, it doesn't necessarily mean that now sellers are in firm control. It just tells us that there's some short-term weakness, and it could result in a pullback to the pre-market support, 66 half to 68, or the initial support zone, 61 to 63 half, and that's really the key spot, right? The balanced low, 60 half, the initial support, 61 to 63 half. That's really the key spot where if that zone goes, then sellers can gain control, and that liquidation idea can still play out. So on the downside, that's really the key spot that we want to be watching, initial support. If this market is strong or even somewhat strong, then we should not trade below that price again. Ideally, we should hold above even pre-market support, but because this market has been very resilient, even initial support would be okay as long as we hold it. But if we break through that zone, then again, we have to be cautious on the longs because that liquidation scenario could still play out, right? We would still be breaking below a pretty important level at that point, and the first test of the zones we've seen overall in this recent trading range has resulted in buyers getting active, but usually the second test of that same zone doesn't quite get the same response. So in the event that we break below 61, the zone at 53 quarter to 55 quarter, previous day's low, it may not get much of a buy response this time. This time the market may have to go lower to attract buyers, and it could go down to 49 half to 50 half, or even 44 to 46 before we get a decent bounce. So same idea as yesterday. So today we're going to be watching the other markets, see how well they're holding up. We'll watch NQ, for example, to see if it's holding kind of the equivalent of the 68s, which is around the 20 to 23 area, and beyond that we have 3500 to 3509 as support in NQ. There's an HVN down there, start of a directional move to the upside around 3506. So we'll be watching that to see are the other markets at least holding, or are they continuing their liquidation? If they are, then S&P is likely to follow, and at the very minimum we want to be cautious on longs, and then ideally position ourselves short. So that's really how this thing is set up. On the upside, 75 to 76.5 is the main resistance zone. Holding above 72.5 would tell us that there is strength in this market. It would bring that overnight high into play, and then if we break above that, then initial resistance zone is very likely 80.75 to 82.75. But because of this relative weakness, we can still expect responsive sellers to be active on first test of resistance as well. And given that there's no major economic catalyst today, especially if we break to the upside, we'll likely just balance, hit resistance, find some sellers, rotate back and forth, and then if we continue higher, hit the next zone, balance again. I think that'll be the theme so far. And unless the other markets really start staging a big breakout, I don't see S&P, really extending the recent trading range by much. So as it goes higher, it becomes more attractive to sellers. As it goes lower, as long as initial support holds, it can be okay for buyers. But if that goes, then you want to be more focused on the sell side. But just manage risk a bit more closely with the S&P on shorts, because the buyers have been very aggressive so far. So just have to keep the overall context in mind. Let's keep an eye on the other markets. Let's see how well all the markets can hold up above their yesterday afternoon breakouts, and we'll take it from there.